Hey guys, Tara Ryan here, and I've got some news for you about how conventional loans are priced and how that impacts your client's interest rate and also their risk of going with an unreputable lender. Bottom line, Fannie and Freddie Mac have released a new matrix which defines how loans can be quoted. So there's always been this matrix based on your credit score and your down payment. There are things that will adjust your interest rate or your price, and you can pay that price either through closing costs or through a higher interest rate. Right? What they've done with the new adjusters is they've added some additional buckets. It used to be the top bracket was 740 and above for a credit score and a conventional loan. Now they've added a bucket up to 760 and one up to 780. So there's a lot more categories in there. In addition, they appear to have increased some cost for the top credit score buyers. It's a little counterintuitive, but I believe they're doing that because they really want to support the first-time home buyers and people just starting out. And so they have made loans more affordable or reduced the costs for the lower credit score brackets and for the smaller down payments. So it's just an adjustment and movement from what we've been used to really for the last 10 years. In addition, they've added something that's highly unusual. You might be surprised to know that a buyer's debt-to-income ratio used to never be part of the pricing. As long as we could get you to a yes, we were good. There was no benefit for clearing the hurdle by more. That is now changed. There is now an adjuster on conventional loans for debt-to-income over 40%. So folks over 40% DTI actually pay an eighth higher in rate on average. That's a big deal. It's a big deal for our industry because we're not used to having that impact the pricing. So there's going to be some bumps in the road as lenders figure this out. My bigger worry is that less reputable lenders will just automatically quote the lower rate and then worry about it later. And then unfortunately surprise your buyer during the process as they discover that the debt to income is over that 40% threshold. What does this mean for you? Well, a couple of things. All the more reason to stick with your trusted referral partners, people that are going to do this analysis correctly up front, and protect your buyers from changes during the process as much as humanly possible. Okay. In addition, there are a number of things that are happening that are making this analysis a little more complicated, more interesting. My background's engineering, so I'm eating this stuff up. Another change is a new program for first-time homebuyers who meet an income requirement. So conventional loans, if the family makes less than roughly $96,000, they can actually qualify for a purchase with none of these pricing adjusters. What that means is, regardless of their credit score, regardless of their debt to income, they're automatically in the top bucket for pricing. It's a fantastic program, but it does make things a little more interesting. I'll give you an example. I was just working on a client file, and it's two buyers, a young couple buying a home together. One of the people in the couple make more money than the other. Credit scores are down in the 660-ish range, and in general, a lender would look at that and go, 660 FHA is going to be better on pricing, especially now that FHA has lowered their mortgage insurance premium. But what we were able to do is go, what if we removed one of the buyers so that they qualify below the $96,000? That removes a number of the debts and allows them to qualify for the amount of home that they want. It puts them into this conventional program for first-time home buyers with no adjusters, which qualifies them for the best interest rates. Bonus, it allows the agent to be able to make a conventional loan offer, which we all know is going to be more likely to be accepted in what's becoming a pretty hot spring market. Bottom line, all the more reason to keep people with your trusted partners. They're going to try their very best to do the right thing up front and avoid surprises for you and your client. And I'd like to think, send it to somebody with an engineer brain who likes working these problems to find the absolute best solution for you and your clients. Give us a call. We're here to help.